With so many sales on these days, how do you know when you've seen a good deal? We make it easier by trawling through the deals for you to find genuinely good prices on genuinely good products, all packaged up into a free monthly newsletter. Using internal pricing data and our own market knowledge, we keep an eye on price changes and let you know whether a product is at its cheapest point. From bargains on TVs to discounts on laptops, the products we share have all been put under the Which microscope, meaning we only recommend deals on items we know work well. Our expert advice cuts through the noise to share reductions and reviews which we think will interest you. So make sure you sign up for our brand new Deals newsletter to help you grab the genuine bargains. Just head to which.co.uk/WP_deals. That's which.co.uk/WP_deals.
When life gives you questions, Which? Get answers.
Welcome to the Which Money Podcast, your weekly hit of money news and personal finance hacks to help make you better off. I'm your host, Lucia Ariano, and here's what's coming up this week.
So it really depends provider to provider. So when looking at the market, we've already seen some providers drop their rates just from last week. But actually, we've also seen the market leaders for instant access ISAs, so that's Trading 212 and Moneybox, they've kept their rates the same for the moment.
Staying with the same provider could mean you're genuinely missing out on discovering new products and services that would make your life easier.
This week, we're revealing the best bank accounts on the market and which ones are which recommended providers. Whether it's high interest rates you're after or excellent customer service, we've done the hard work to let you know which banks are a cut above the rest when it comes to both savings and current accounts. Now, joining us to reveal all and explain what to look for when switching banks are Sam Wilson, a market analyst here at Which, and Amy Knight, personal finance expert at NerdWallet UK. Welcome both.
Hi, Lucia.
Hi, Lucia.
Now, we will get to the banks and the accounts we recommend shortly, but Sam, first things first, how do you go about working out what's good? What kinds of things are you looking at?
So when we're researching the best current accounts and savings providers, we combine our customer satisfaction surveys with in-depth product research. So what this means is that we survey people's experience with the providers that you find in our tables, and then we combine that with Moneyfacts data, which is the leading financial services data provider, to scrutinise the features of the savings and current accounts products that providers offer.
And just before the show, we were talking about how we've gone the extra mile with savings accounts this time round, haven't we?
Yeah, so this time we've actually analysed a whole 3 months worth of savings data. And we've also expanded the amount of accounts that we look at to really make sure that we know that any providers we recommend offer excellent rates.
Well, let's park current accounts for now. We'll get to them a bit later on. But first, let's start with savings accounts. And Amy, now, savings rates is something a lot of people will have noticed coming slowly down recently. Can you explain in a nutshell why that is?
Now's definitely a good time to look at this, as we're just beginning to come out of a period of high interest rates. Historically speaking, not that high, but relative to what we've been used to since the financial crash. So 5.25% was the highest interest rate we've had for 16 years, and it stayed there for nearly a year. And high interest rates are no fun for borrowers, but they can be helpful for savers. And most listeners, I'm sure, will know that you want your money to be beating inflation. You want it to be growing faster than the rate that prices are rising. And banks can add a little extra on top of that when the base rate is high. But now the Monetary Policy Committee, the MPC, have made a couple of cuts to the base rate. Great for those with a mortgage. They made the first cut back in August, another on the 7th of November, and the base rate is now down to 4.75%. It's likely to keep going down further next year. When banks aren't earning as much interest on the money they're lending out, they can't pay as much interest to savers. You may find your bank contacts you or has contacted you. I've had a few emails in the last few days to let you know that the interest rate on your savings account is dropping. So if you do see an email, it might be worth just reading that to find out which accounts are affected.
So these base rate cuts, I mean, how long does it take for us to see a difference in our accounts, for us to get those emails? How long does it take to be passed on to the customers?
So it really depends provider to provider. So when looking at the market, we've already seen some providers drop their rates just from last week. But actually, we've also seen the market leaders for instant access ISAs, so that's Trading 212 and Moneybox. They've kept their rates the same for the moment. So when it comes to variable rates, it really does depend, and you just need to check with any provider and look out for those emails if they are going to reduce their rate. For fixed rate accounts, of course, once you've locked in, that rate will be the same for the whole of the term. But if you're looking for a new fixed rate account, they're constantly updating those rates as they predict where they think the base rate will be in the future. So it's not as big of a jump that we see when the base rate falls, but we do expect fixed rates to start to come down.
Okay, so drum roll please then. Let's start revealing some of our WRPs, the which recommended providers. So Sam, where do you want to start us off? Who's come out top?
So I think probably best to start with top of the table, and it's actually a new entrant this year, Moneybox, that is a new WRP and tops the table. They're primarily known as an investment provider, but recently have started to bring out savings products, and the customers that we surveyed absolutely love them. One to look out for is its instant access cash ISA. We regularly see that have the best rate in the market.
It's not one I've heard of, Moneybox. Is it all online? Is it app-based?
Yeah, so they're primarily online, and they are also quite a new investment provider. So just generally to the space, they are quite new. But we see them offering really competitive rates, and customers also seem to like the service as well, not just the excellent rate. Moving on, we have Marcus by Goldman Sachs. This is a returning WRP. They have quite a streamlined selection of savings accounts. So currently they only offer 3, but they all offer excellent rates, not quite at the height of Moneybox, but still very good rates. We then also have Yorkshire Building Society. This is a new WRP this year, but they have been included in our results before. They offered the widest range of savings products among our WRPs, and they also do have branch access, which the other two don't, that I previously mentioned. And then last but not least, we have Zupa, another returning WRP. They also have quite a wide range of savings accounts, not quite as wide as Yorkshire Building Society. And we see excellent rates from Zupa. They came out top in our rates analysis that we completed as part of this research.
It's really interesting to hear, isn't it? Because listeners might be thinking, okay, where's, all these household names, NatWest, HSBC, Lloyds. Where are these big high street banks? Yeah,
so we see them, some of them are right down the bottom. So we have Barclays Bank, we have the Bank of Scotland, the HSBC. They really didn't score very well. We do have some that are a little bit further up. So Nationwide Building Society is probably the most recognisable name that is higher up in the table, but a lot of them are in the middle. We see kind of Lloyds Bank, Halifax, Santander in the middle and not really doing anything special.
And is that something that you've noticed as well, Amy?
Yeah, definitely. As Sam was saying, consumers want the best interest rate, but they also want a great banking experience, and they want customer service that works for them. For many people, being able to top up, withdraw and manage their savings via mobile with a slick, well-designed app, it's not just convenient, it feels more empowering, and it can even make saving feel fun. The emojis that flash up on your screen may not be for everybody, but they're definitely engaging for some customers. And I'm really pleased to see that there is a bank with branches, so Yorkshire Building Society, still on the WRP list, because some customers do still very much rely on in-branch access. But on the rate side of things, big name banks have got away with offering measly rates because customers get so stuck in their ways. There will always be customers for whom those long-established, trusted high street names are the most important factor when choosing where they're going to put their savings. But as savers get savvier and digital banking makes it easier to very quickly and easily move money around, the rate and the process of applying, the fact that opening an account feels very hassle-free on an app, that's a winning combination that's going to draw customers in.
And so is it this then that these digital banks are offering something slick and quick? Is it this kind of digitalness that's making them dominate, do we think?
I would say so. More customers are thinking about leaving their traditional bank to join the digital banking revolution. And by establishing themselves as digital first and not having branches, the challenger banks have made their operations more streamlined, cutting down their overheads, And that's how they're able to offer very competitive pricing and great rates on savings. But the innovative design and the user experience is also very important. And I think that's what might be driving the shift away from the high street banks, because customers want managing their money to be fast, effortless. When you can remove some of the friction and make that financial life admin feel easier, people are more likely to engage with their savings, and they're likely to get a better rate when they do.
Yeah, I think they're all really good points. I think the customer experience is definitely really important, because a really interesting result in our survey was that Kahoot, that came bottom of the table, we regularly see them offer the best rates in the market, for instance, Access Savings. But customers clearly didn't enjoy the experience. So even though they got that great rate, they still performed poorly. So I think with Moneybox and Zupa, they're really showing that they're able to combine an excellent rate but with a good customer experience.
Well, that's savings accounts. And after a quick break, we'll be back with the best current accounts on the market, as well as some tips on how to ensure you pick the right bank for you. We'll be back after this.
Next time you need to get work done on your home, or your car, or your garden, make sure you choose a trader you can trust. And don't just choose any trader, choose a Which? Trusted trader. Our trading standards professionals only endorse traders who've passed our rigorous assessment that includes credit reports, customer satisfaction surveys, reference checks, and interviews. When we say a trader's good enough to display our Which? Trusted trader logo, you can trust us. But don't take our word for it. Search Which? Trusted Traders online to see our directory of around 4,000 traders. Every customer review you read there is verified genuine by our moderators, so you can choose with confidence. To find a local trader you can trust, search Which? Trusted Traders or go to which.co.uk/traders. That's which.co.uk/traders. Everybody needs a trader they can trust.
Okay, so before the break, we went into savings accounts. Sam, let's talk current accounts now. Who's coming out top here?
Well, long-time Which members will probably recognise a few of these names, as they've regularly performed very well in our research. So first of all, First Direct, another WRP. They've been a WRP for over a decade now, and they just always perform excellently when it comes to customer service, and the people who respond in our surveys always say they have a great experience with this provider. Even better, in the last year or so, they've started to offer free spending abroad. So it shows that they're not just sitting on the morals, they really are trying to improve the product that they offer to their customers. Our new WRP this year is Monzo. They've regularly done well in our survey in the past, and we've now felt able to offer them a WRP this year. So it's excellent to see them join our other two WRPs. And then finally, Starling Bank, another WRP that has performed excellently in our survey for a number of years. They've been a WRP now for, I think, over 5 years, and it earned a top 5-star rating for its online banking service and mobile app.
3 names that do come up time and time again. It's great to see them all coming up today. And again, you know, these high street banks that you might be expecting aren't in that top 3. And as you mentioned there, we are looking at some other benefits as well when it comes to current accounts. So you mentioned fee-free spending abroad. I mean, Amy, why do you think some banks aren't keeping up? Like we said, you know, First Direct has been changing its products. Why are some other banks perhaps falling behind?
Yeah, traditionally, the high street banks, they've had a much more established customer base because they've been around so much longer. And with a massive chunk of the market share already, they've perhaps felt they didn't need to compete quite so hard to attract new customers. We mentioned earlier that people do often get very stuck in their ways with where they keep their money. There's a lot of inertia. Many people will just stick with what they've got. But Sam's report clearly shows that these big name banks can't afford to be complacent. And just to give a little bit of history, back in 2014, so about 10 years ago, the Competition and Markets Authority launched an investigation into the UK banking sector and found there were too many barriers for customers to search and switch bank account, not enough competition, making it difficult for these smaller banks to grow. And with no incentive to innovate or improve their offer for customers, that meant we were missing out, we the customer, missing out on products and services that might might better meet our needs. And thankfully, as a result of that investigation, they kind of blew the doors open to innovation, and out came these digital banks. And 10 years on, the high street banks are now going to come under a lot of pressure to up their game. The likes of Monzo and Starling are adding so much extra value for customers. The budgeting tools, the savings pots, the roundups, I'm a really big fan of. Those ways of saving without feeling like you're saving. So when you're going abroad and you're not having to pay fees, that's another massive win.
Do we think that not having a huge high street presence for banks like, the Monzo, the First Direct, the Starling Bank, are digital banks then able to divert a lot of their resources into good online customer service, making it then, a lot more convenient for people?
Yeah, what good customer service looks like can be somewhat subjective. However, there are certain things I think pretty much all of us agree on, like how utterly miserable it is to wait for hours on the phone when you want to speak to someone at your bank, or turning up to a branch to make a transaction or ask for some help to find that it's closed in the middle of a weekday. So yes, for most people, being able to send an instant message or start an online chat with a representative from the bank within seconds of opening up the app, that feels a lot more convenient and a lot more satisfying. Potential downside is that it can be quite hard to tell whether there's an actual person on the other end of that conversation. AI chatbots genuinely can resolve some customer queries, but dealing with someone who's not human can feel a little bit uncomfortable for some customers. I would say, though, that as a society, I feel like we're becoming more impatient. I know I am as a customer. So where banking apps can win on customer service is by giving the customer an instant response, even if that is just a chatbot saying, we've got your message, we're going to look into this for you.
100%. I've been in that case where I've just been on the phone for half an hour waiting in queues. It reminds me of waiting in energy bill queues, which is another conversation. We don't need that, do we? There's already enough admin. When we finally get to sorting things out, we just want to be able to do it quickly. Okay, so for anyone thinking, I think I might actually switch. I might switch current accounts. It's not just about the interest rates, customer service. You can also sometimes get quite nice incentives for switching current accounts, can't you? So can we talk about some of these switching deals that are available right now?
Definitely. So switching bank accounts is a great way to possibly earn over £200. Of course, we should always consider the bank that you're looking to switch to. You do need to, like you say, make sure that you're going to get good customer service and there's going to be good features to that account rather than just moving for the money. But the good thing is, currently we see 6 different switching offers available, and of those, one of them is First Direct, a WRP, and another is Nationwide, which isn't a WRP but has performed very well in our survey. And it was actually the provider that performed best out of those with branch access. So there are lots of offers on at the moment. But don't worry if sometimes you don't see offers. Sometimes we see them dry up all of a sudden.
6 does feel like quite a lot right now.
6 is far more than we would normally see. I think we often see more in the run up to Christmas.
Okay.
Banks know that it's a time of year where a few extra £100 is very important. But at other points in the year, so around May time, we did see that there were no switching offers. But often when there are none, they suddenly all come back. So if you are looking to switch and there isn't an offer that you like, or there just aren't any offers at all, if you wait a couple of weeks, chances are there'll probably be a few that will come up.
After Christmas as well, I always feel like there's a few offers popping up. Well, should we talk about the small print then? When it comes to switching, it is easy. It can take 7 days, or it should take 7 days. Is that right?
Yes. And you really do need to read the small print for these offers, because we have seen them start to tighten the criteria that you need to qualify for the switching bonuses. So, for example, First Direct and Nationwide, their current switching deals, you need to have never benefited from a switching bonus from those banks or their partner banks. So with First Direct, that's HSBC, and with NatWest, that's RBS and Ulster Bank. Normally in the past, you could have benefited from a switching offer with either of these providers if you just had left it 2 or so years since you last benefited. But we are starting to see more and more providers where you kind of ever benefited from a switching offer. We also see other criteria that's tightening. So, for example, normally you need 2 direct debits when you switch to get that bonus. Some providers are now asking for 3. So Lloyds Bank are now asking for 3. It's only one more, but it is something that you might just need to be aware of if you thought it would be 2 and then you're thinking, why haven't I got my 150, £200? So it's just really important that you do keep an eye on the specific terms and conditions of the provider that you switch to.
Sam, you mentioned Nationwide have got a switching deal for new customers at the moment. How much is that?
So that's £175.
So loyalty definitely doesn't pay here, because Nationwide paid out a thank you payment of just £100 to their members earlier this year. So that makes the case for switching rather than staying put.
Well, that's an interesting one. Should we just pause on that for a second? Because I personally have never been paid a thank you payment that I can remember. Is that something that banks do?
No, so I think I would definitely remember if I'd been paid a thank you. So no, it is a real rarity and is really down to the specific way that Nationwide is set up. I don't know if Amy would like to talk more about the specific way that Nationwide is set up.
Because their customers are known as members, that's how they essentially receive a little share of the profits. But reading the small print, once again, is important, because you have to be using your current account in specific ways to be eligible for that payment. So you need to have a minimum number of transactions going in and out, a minimum amount of money in your bank. I think it might have to be your kind of main account rather than just one that you use occasionally.
And so to round up then on switching, I mean, for me, it seems like a bit of a no-brainer. I haven't done it recently, but over the years, I've done it quite a few times. I mean, is it something that you'd encourage?
I would, but the classic answer here is it depends. A lot of people, as we've said, they get very stuck in their ways. They don't move bank account for years or even decades, taking a sort of if it ain't broke, don't fix it approach. But staying with the same provider could mean you're genuinely missing out on discovering new products and services that would make your life easier, not just these flash in the pan cash incentives that banks are using to attract new customers. I think it's important to remember you're not married to your bank. While the relationship we have with our current account can be a long-term thing, it doesn't have to be. It's okay to play the field a little bit and get what you need from your bank. You can have multiple current accounts open at once and use them for different things in order to take advantage of the specific incentives or benefits or perks that different providers are offering. And you can have the best of both worlds that way. You could keep a traditional bank for some aspects of your finances, particularly if for some things you want to go in and have a real conversation with a person, and then use an online provider for everything else, and you kind of get to have your cake and eat it.
And can we just bring in credit scores quickly? Amy, I know your colleague Adam French was on recently. We talked a lot about credit scores and credit reports. Switching, I mean, how is it affected if we switch regularly to earn a bit of cash? Is it going to leave lasting damage on your credit score?
Potentially. It's not so much the act of switching current account itself that carries a potential implication for your credit score. It's more about what's attached to the account, specifically borrowing. So if you're opening a new current account and it's got an overdraft facility, that's going to require a hard credit check. And that check will cause a slight drop in your credit rating, but that little dip should only last a few months. An issue could potentially arise if you are switching and hopping around between current accounts more frequently, and then your credit score hasn't got time to bounce back in between. You do also need to just be mindful of payments that you've got going out of the account that you're intending to close. If you're going to use the current account switching service, which I would thoroughly recommend, payments should automatically be transferred over. But because missing payments on something like your broadband contract or your mobile contract, if you don't make those payments, that is going to damage your credit score. So for peace of mind, you might still want to make a list of everything you've got going out and then just double check once you've switched. It's all transferred over.
And we've covered so much ground today, a wealth of knowledge on current accounts and savings accounts. What final advice then would you like to leave our listeners with? Anything you might want to revisit or anything we haven't covered today?
It's important to make sure the cash incentive that you're going after, that money you're going to gain by switching, is worth more than any perks or benefits offered by your current provider. For example, some banks offer free travel insurance with the current account, and that could be worth quite a bit of money. And that might be worth more to you than this one-off cash bonus that you're going to be offered by a competitor. So before you switch, my tip would be to just take stock of whether there are perks or benefits that you're not taking advantage of with your current bank account before you walk off into the sunset with your new one.
And Sam, what would you like to leave our listeners with today?
Yeah, so whether you're looking for a savings account or a current account, what's really important, I think, is that you consider the customer service and the service you're going to get from whichever provider you choose with the specific product features, and really think about what product features are important for you. Some people, branch access is incredibly important. For other people, when you're looking at a savings account, it might be the minimum deposit amount. And then when it comes to a current account, it might be really important that you get fee-free spending abroad, or you have that little interest-free overdraft buffer. So it's just trying to combine the excellent service and customer service with the product features that are important to you.
Well, it's been a great show. Thank you both so much for coming on today.
Thank you.
Thanks a lot.
Well, a huge thank you again to Sam and Amy for coming on the show today, and to you for listening to this week's episode of the Which Money podcast. If you enjoyed today's show, please do hit subscribe to make sure you catch our new episodes as soon as they drop. For daily money news and advice, you can find us on social media at Which Money and online at which.co.uk/money. And we also have a free money newsletter which is delivered to your inbox every Monday. To sign up, visit which.co.uk/money newsletter. This episode of the Which Money podcast was hosted by me, Lucia Ariano, and produced and edited by James Rowe.
Life can get hectic when you start a family, but Which can help you make confident decisions from improving your home to financial planning. We'll make sure you're prepared. Whether you're looking to reduce your household bills, seeking advice around your child's health, or want to find our best buys for your new home, Which has got you covered. Use our expert advice to make the right choices for you and your growing family by visiting which.co.uk/growing family. That's where you'll find everything you need to make confident decisions and have peace of mind that all the advice you're getting is 100% independent. So to find out more, just head to which.co.uk/growing family.